This is your market recap for July 3rd, 2025. Today being the last day of the trading week, we played bullish. It's kind of hard at all-time highs to pick a high, so that's why we were playing bullish today. If we go down to the hourly time frame, well, first we can see here nice daily for value gap, which we reacted off of for Tuesday and Wednesday of the week. But then if we go down to the hourly time frame, we can see more of what happened today. A shorter day, market closed at, it appears, 1, give or take a couple minutes. So what we did today is this candle right here is 8, this is 9. 8 o'clock we came up, took out this high, which caused us to retrace. We then used the 9 o'clock candle to expand, and then subsequently the next two, we retraced for lunch, taking out this low, and that's where we closed. Go down to the 15-minute, not really much. You can see sweep, retrace to equilibrium most likely from the looks of it. Expansion, 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 retrace that happened after 9:30, and then we expand again, retrace in lunch. It's a very short day, and it's kind of just one direction, so it's not going to take very long. Get another, once again, pump up. Sorry, pump up, took out this high, retraced, right, well below equilibrium. So right there. Then we expand again. We have this 5-minute fair value gap that gets touched perfectly. It looks like we stop at 75%. We then expand higher. 9:30 candle drives us up, closing us finally above this high. We then, for the next couple minutes, retrace, staying within this 5-minute fair value gap, not putting a body in it, which is a good sign for playing bullish. We then play bullish once again. Now at all-time highs, it's, I'll say, kind of hard to pick your expansions, but what I'd say is you have to use a fib at that point, and I'll show you how to do that on the 1 minute. But once we hit around 10:30, given that the move started, let's say 9:15 to here, it's 15 bars on the 5-minute time frame. It's a lot of math. That's a whole hour. Market usually, now don't quote me on this, but usually every hour we see a retrace. So here we go. Didn't happen for the macro because we didn't start that early. And because the market was simply just not giving it to us. We set a small retrace here, taking out this low here, staying well within this 5-minute, maybe encroaching on that bottom. And then we expand once again to some unknown all-time high before we react off this 5-minute fair value gap, dip below it, use it as an inverse once and twice to come take out this low. Now on the 1-minute time frame, not entirely a ton to play with. Here again, sweep that, retrace up, 5-minute fair value gap, expand upwards. We're at all-time highs now. We retrace. For some reason, I don't think this is an SMT. Yeah, actually, maybe. I think all of this is an SMT because ES didn't really have this retrace. So I guess you could say this is an SMT that pushed us down, but maybe. Then if we grade this whole expansion, equilibrium is right there, perfectly at equilibrium of this 5-minute. Just kind of a nice coincidence. So we want to dip down below equilibrium. We do that, nice 1-minute body candles close to the bottom of this. We then tap this liquidity way over here, which we previously swept. We tapped that and then played bullish. The macro kind of just added fuel to the flame and gave us a very nice expansion upwards, where we started to go horizontal. I guess you could call it retrace. We have an SMT of these lows, which then also staying within this 5-minute. Look at the nice closures right at the low there. And yes, you say these are outside, but they're close enough in my opinion. So with this SMT, it then expands higher up to here. And then we're looking to retrace for lunch. We get this SMT here. Also with this 5-minute inverse, could play this lower if the market presents it to you. I could very well see this being too fast of a play to even catch. Again, we are targeting this low here. and then obviously market closed at 115. So what I mentioned with finding profits at all-time highs, let's say you wanted to play off of this retrace right there. So what you do, you take the fib, go from the bottom to the high of that, you'd open up your fib, and then you'd find whatever expansion you're looking for. So if a 1-to-1, or if -1, which is basically just this, flipped up there, right? It is this range. I'm not surprised I keep going away. It's this range right here, 53 handles. Just expand it upwards. I don't want to click on that. Expand it upwards. 53 handles, give or take, but that's my error. So for this one, a 1 would have worked. But God, man, 1 would have worked, but it also looks like 2 would have. We go boom. 2 would have worked. 225 was this high right there. So if you knew exactly that it would go 2 1/4 standard deviations of this move, that would have been a perfect exit. But I would just target a good RR with using your fib expansions. Don't try to bite off more than you can chew, for sure with those. So yeah, that's kind of all I have to say. Not a whole bunch. Next week, like I mentioned, don't want to pick an all-time high. So I'm just going to say we're going to keep playing bullish next week. Definitely will expect some sort of bearish action. At the beginning of next week, we might come back to this as a order block, Monday or Tuesday, to kind of get our bearish quota for the week, and then obviously expand higher. If we go on the hourly time frame and we use the fib on this retrace here, say 1-to-1, 1-to-2, I could see these be our targets for next week, right? Maybe a dip down here below this low Monday, and then expansion upwards. But again, at all-time highs, you kind of have no, at least personally, I don't feel comfortable playing anything except bullish until something provides us with evidence that it is not going to play bullish. So yeah, just what I'm looking for next week. So this has been your market recap for July 3rd, 2025.